I'm sure we're all aware that the UK-EU transition agreement will end on the 31st of December, and from midnight, the UK therefore will leave the EU single market and the customs union. Mark and I have been particularly active over the past 18 to 24 months. We have advised many companies how the end of the transition period and therefore the implementation of customs procedures between UK and EU trade will, and these are very important points, affect the relationships between you and your European customers and suppliers. And in our experience, a lot of companies have not really considered the effect that this change will have on their relationships. And one thing I'm really concerned about is that if you don't pick up the phone and talk to them about how you're going to be working next year, they could move and find a European supplier, and that would be awful. So it's really important to understand how the relationship will change. And don't forget, a lot of your European customers perhaps only trade within the UK, within the European Union. Therefore, they will not be familiar with customs procedures either. And I think it's up to us as the suppliers to take the lead on this. But it will also have an effect on your suppliers, goods that you're importing from Europe, and therefore a dialogue needs to be had there as well. Another thing that Mark and I have been looking at very closely with companies is the cost. How much will your balance sheet be affected because of our relationship with Europe changing? And actually, we can be quite accurate. Once we know the products, we know the customs codes, and we know the type of importing and exporting that you do, we can actually be quite accurate with the cost to your business. And then we can also look at introducing mitigating customs systems that may help to make it an easier business for trading with Europe and reducing the costs. Another area that I'm concerned about, and this is particularly for businesses in the UK who do only trade in Europe, and there are 138,000 businesses in the UK who only trade with Europe, and that is the effect of legally binding Incoterms, which will be introduced on all UK-EU trade from the 1st of January. And why do we need import and export declarations? This is another really important part of our relationship with Europe. Currently, the UK submits 55 million import and export declarations to HMRC for all of our non-UK business. But if you think that from January next year, all of those 138,000 businesses only trading in the EU will also have to do declarations, and 45% of our trade is with the European Union, the number of declarations will increase by at least 200 million. So we're expecting by the end of 2021, about 255 million declarations will have been submitted to HMRC, where currently at the end of 2020, it will only be 55 million. So there are some really important points here. Now, I do know that HMRC and the government are making big strides to make this easier and to make it happen. But nevertheless, we have to be aware of these things, because at the end of the day, it's our business, it's your business that's going to be affected, and you need to understand the principles. So I've been working with Mark Robotham, for about 5 years. Mark is a past senior customs officer who started his own consultancy business about 20 years ago. Mark and I have a really good working relationship.
Nick,
sorry, Mark.
Just breaking. Can you allow Dimitri in? Yef has just sent a message. Dimitri Serafimov is waiting.
Sorry, there are more people wanting to come in. I shall let them in now. So, I've had a very good working relationship with Mark over the past So we've still got more people waiting over the past 4 or 5 years. So now, I bet you're fed up with listening to me. I'm going to hand over to Mark Robotham. Mark.
Thank you very much, Nick. And also for the benefit of our friends from Belgium, goedemorgen en welkom. Is goed voor hier te zijn. Which is probably enough of saying anything in another language, because most people here are from good old this part of the world. Anyway, thank you very much, Nick. It's good to be here, good to be talking to you. I don't think I need to say anything more about myself. Nick has ideally said it all. So without more ado, what I want to do is to come into the presentation, and albeit I will mainly use this as a matter of course. However, I will also make various other observations as time goes on, because some of what I want to say obviously is very much on the slides, but there are various observations from a variety of meetings. Nick and I have already had online conference calls with our friends in Belgium, and theirs is a major element in lots of ways, because they are on the continent, they are dealing with imports from the UK, and hopefully they may want to make some comments during this session or even afterwards. So in any case, their details are available. This is the sort of event where we bring people together. I want this to be an event not so much like the United Nations General Assembly, but certainly a forum for people to talk to each other. A lot of what we do is sharing, and I think this is important to all people involved in trade with Europe and even beyond. Now then, the first thing that we have is the original announcement from the government of how the whole structure was to work. And as Nick said, with a sheer number of declarations likely to go through the customs computer, I think we would be realizing by now that the computer will get swamped with entries, and that at the moment the HMRC system is being modified in order to allow for simplified declarations and very much a simplified regime, so that we can avoid a lot of the problems associated with the submission of full declarations. Anyway, phase 1, phase 2 and phase 3 have already been established, and this is the structure for what will happen as from January the 1st, or in more likely January the 2nd, because we will all hopefully be on holiday taking a well-earned rest. Phase 1, that there will be the need for basic requirements for all standard goods, etc. Now, that does not mean that declarations will have to be submitted literally at that time. The government has given grace of 6 months for declarations, or certainly full declarations, to be submitted to the computer that will actually declare the goods for duty and VAT purposes. However, what there is the need for, and this has been stated, is the use of what we call EIDR, entry in declarant records, and I've already informed some of you, because I think most of you know me anyway, and I've alerted you with the need for simplified declarations themselves, or simplified procedures, and also the use of EIDR, which is a spreadsheet record. It has actually been put on the Customs or HMRC website under the title Declaring Goods into Great Britain from January the 1st. And it states exactly the fields that are required. Now, that spreadsheet already exists and is with the Chamber. I've already sent Nick copies of that, and we can send it out to you, but on the provision that you will also need to apply for simplified procedures using the form C&E 48. Now, I'm not expecting you to scribble all the details down that we're talking about, and that means that you can come to us afterwards and then ask us, what do I actually need in order to prepare? And this is why we are here with the information that we can send it out to you, those of you who I haven't already talked to. Now, what will happen is that the stages of customs controls will kick in gradually. Phase 1, as I've mentioned. Now, it says that tariff payments can be deferred. They can indeed. I'll come on to the issue of VAT in a minute. It's there, in fact, on the screen. But the first things that will have to be checked are alcohol and tobacco goods, excisable goods, namely. And of course, there is a huge trade in that. From South Yorkshire, a lot of beer goes out from the craft breweries into the continent. And there will be a need for breweries, therefore, to have a system on board for that. And indeed, for wines and spirits merchants in South Yorkshire to have the system on board for the purposes of declaration for the imports of wines and spirits, because this will be an essential as from day one. I had that indeed from an officer in HMRC a few weeks ago when I was involved in a webinar for the excise industry. So when we have dangerous goods, chemicals, anything that goes flash, bang, wallop in the night, alcohol, tobacco, etc., that will all be part of the initial checks as from January the 2nd. But then comes the issue of VAT. Now, VAT, funnily enough, has not been discussed in depth. It's trickled out by other means. Now, I know that BCC and various others have already stated that HMRC have allowed a degree of leniency to the point that obviously agents with deferment accounts can be used. But HMRC are implementing a new system. In fact, it's not new at all. I used it when I was in the department some years ago, which ages me slightly. It's called Postponed VAT Accounting. The principle is that normally on an import entry, the VAT is chargeable and you pay it at the time the entry is submitted, or at least as long as the customs computer has calculated it. Now, that would mean you pay the money and you can't do anything until you claim it back on the VAT return. This system is effectively being done away with for all imports. We're going to have postponed VAT accounting, which means although the VAT is payable, it isn't going to be paid physically. It is actually postponed until the VAT return, which is why you also need very copious spreadsheet records to show per transaction what your duty and VAT liability will be. Because what will happen is, on those records, you'd show the duty and the VAT, but you don't physically pay it. You wait until the VAT return and the receipt, which for some of you may be something new, of a document called the C79 Import VAT Certificate, which would show the entry number and it will show the import VAT payable, which you then reconcile against your spreadsheet and eventually declarations. And then you enter it on the VAT return on your purchases, and you therefore reclaim it in the same way as you would for a reverse charge mechanism for Intrastat. In other words, you charge yourself the VAT and then reclaim it. So it means you won't pay the VAT. You would be able, using your simplified procedures and a deferment account, to completely override that and simply declare it. It'll be an accounting exercise, not a physical payment. And I urge you to bear this in mind, because it's a cash flow issue, and therefore you will find that your overall bottom line will become much more favorable. So this is something to bear in mind. Then they need to look at the issue of physical checks, if there are any, because using a declaration system, there is automatically a regime whereby the computer has the ability to flag up consignments for verification if it so wishes. It's called Route 1, Route 2, or Route 6. Route 6 is the easiest. It's cleared without examination. But if it's a Route 1, it's a documentary check by HMRC or border agency to make sure the documentation is correct. If it's a Route 2, it's a full out turn examination, and that's the last thing you want. But customs have reserved the right to carry that out on traders that they feel may not have presented the right information, or they have an issue with the VAT number, or even information on the documentation. So it's worthwhile thinking about that this could, I'm not saying it will, but it could happen. So you do have to be prepared for it. Now, phase 2 is to do with dairy products, animal, meat, anything which is subject to health certificates, and even derivatives thereof. Things like gelatins, powders that are used for foodstuffs. All these will then become subject to phase 2 checks and examinations, and therefore the need for pre-notification and, of course, the relevant documentation. And therefore, we're looking at dairy products, meat products, plant products, anything which is seen as being a living organism, fish included. Whether that's going to mean that we have officers assiduously walking up the quaysides at Grimsby or wherever else to check on fish coming in, Not that the fish can actually answer you. It's not going to look at you and say, hey, I'm from Norway. That won't happen. But what will happen is that they reserve the right to look at foodstuffs coming in, especially things like continental cheeses and various other items. So that should be borne in mind. And then phase 3 is anything else. In other words, all the main commodities. There will be checks made on specifically sensitive materials, but again, it's more likely to be background documentary checks. It may be a route 1, but it depends upon whether the computer will select anything. Now, given something like nearly 300 million entries per year, a lot of which will be imports, I think it might be a challenge for the customs computer to physically at random select products coming in from Europe. I mean, from the non-EU countries, it's not been a particular issue because everything is pre-notified in advance. In reality, the pre-notification is vital because nowadays, declarations are done on the strength of the physical arrival in the country of import. But with this scenario, most information will have had to have been submitted into the UK customs computer in a similar way for exports going out well in advance. And that will mean that the importer may be notified that a check is going to take place on their product when it arrives in the UK. So we do have to bear this in mind because it may be a very important element of the clearance of the goods. You can do an import declaration or whatever, but because of the simplified procedures, an abbreviated entry would be submitted at the time of entry in the country, and it's that will come up for selection for examination either on a random basis, as would normally be the case, or a specific basis because a particular import is being targeted. So again, it's a way of making sure that your records are in place and that your status with HMRC is known because of these issues concerning serial numbers, VAT numbers, anything which may attract attention to the customs computer. So it's a way of saying that now is the time to start looking at your own status, making sure that your compliance history is particularly good. And if you have had problems, that now is the time to rectify them to make sure that HMRC is totally happy with the way you conduct your business and that all information concerning declarations, invoices, packing lists is detailed enough to give the computer the exact details of what it needs in order to clear the goods through without the need for any examinations. Now, if you do have any issues, please contact us afterwards. As Nick said, this is what we're here for, and we do compliance audits on this basis. So it means we would look at your history. In fact, we already have done in many cases, as some of you know, in order to determine how secure you are, how compliant you are, and then if there isn't the need for any action, to implement it. And this is why we conduct risk analyses. Indeed, the underlying fact of all of this is risk. It's HMRC risk assurance. I've been very heavily involved with it over the years. And I hasten to add that the computer will look at information based on the risk status. And if it finds that a company is anywhere between medium and high risk, it will take action to determine the validity of all goods going out or even coming into the country. So bear in mind that your risk status is vital to the operations that you carry out, and I cannot emphasize it enough. Now, with exports, we have a system that is very similar to CT-PAT in the States and Canada, and indeed is being operated worldwide. I recently did a study, in fact, for an organization in the Middle East, because I was involved in the initial stages of preparing the document for the initiation of the implementation of a new pre-clearance system in the UAE. And this had to be operated largely along the lines of existing systems, including CT-PAT in the States and Canada. And it is an advanced cargo pre-clearance system, ACI as it's known. And this now applies to Brussels as well, and has done since the year 2010. We are now on the outside of the EU, so we will be expected to adhere to these procedures for everything leaving the UK and going to the continent. And I'm quite sure that my Belgian friends will correct me if I'm wrong on here. But it means we'll be using the Brussels import clearance system to pre-clear cargoes on the basis of the manifest. Now, if the manifest gives the full details of the cargo, then fine. It will probably be allowed through with what we call a movement reference number. However, if the computer doesn't like the information, it will issue a message saying DNL, do not load. In other words, that consignment is going nowhere until the manifest has been revised and the full information, which means you cannot put down freight of all kinds or said to contain, because the computer's pre-programmed to reject those phrases. You have to detail the consignment, commodity code, and basic description, and of course, quantities, measurements, what have you. So that will be essential. If the computer picks it up and says, yes, we're fine with that, it will issue the movement reference number. Now, this ties in with a new system that is at present being developed. It is not yet available because the government is still in the early stages of developing it. It is called the Goods Vehicle Movement System. We don't know when it will be fully implemented because it is in its very early stages. Nick and I have already had conversations about it, and indeed we had conversations with our Belgian friends who are on board today, and they told us that the French system is already available, but having said that, it is not compatible with the rest of Europe. So we're going to have a system which is compatible with the Brussels system and will be tried and tested in order to work as soon as it is implemented. Now, the GVMS system is designed to work alongside the Brussels ICS, which means that the movement reference numbers will be tied in with GVMS and will be there for an electronic facility. But that is the predetermined element prior to declarations actually being submitted, because the declaration would then need that movement reference number in box 44 in order to facilitate not just the export clearance of the goods, but their subsequent transport across the channel of the North Sea into the EU. And that, of course, will include Ireland. So we will be besieged, as it were, from all sides concerning the use of these facilities. So we have, therefore, this scenario of pre-clearance through the Brussels ICS using GVMS, and then the export declarations, and then, of course, the subsequent shipment. Now, as Nick has already said, up to now, we've used a sort of Incoterm, freight collect or freight prepaid. No longer will be the case. HMRC have in fact said that they do not want companies to use either XWorks or DDP. I'm not going to go into DDP. It is in itself a seminar because it deals with the need for VAT numbers being obtained on the other side of the North Sea. Not that that is a huge problem. I've already taken several companies through the Dutch VAT registration, and that is more or less a straightforward affair as long as the Dutch get their act together. However, in some cases, you would also need a fiscal representative, and that is why this is not something I want to look at now. This is for a later occasion. But suffice to say, this will be a requirement if you are going to arrange goods on a DDP basis, such as the Incoterm would require. Now, with simplified export declarations, the SDP, Simplified Declaration Procedure, will be used, but HMRC are standing by their original requirement that agents who are submitting this system or using it, and indeed are using the GVMS system, would have to be AEO Safety and Security approved, or certainly AEO approved. And this is still what HMRC are looking at because of the need for a streamlined trade facilitation system where all information concerning an export is submitted well in advance, so that effectively the consignment is pre-cleared before it arrives on the continent. And this is where AEO allows you to do this. It is a global system. This is part of what I was dealing with the UAE and with various other authorities, I hasten to add, in Africa particularly, and they recognize the need for pre-clearance as well. So it is global, and it is something that we will eventually have to adhere to over a period of time. So in reality, there are certain preconditions which HMRC are still working on, and in reality will be the main prerequisite for the use and submission of simplified declarations. Now, for imports, we've already mentioned full border controls. Import declarations will be required at some stage, whether in the form of supplementary declarations or full declarations. The other main area that is being expanded is what we call customs freight simplified procedures. Now, this is an electronic simplified clearance procedure. It means that the organization submitting the entries would have to have an electronic software system on board. Again, I discussed this with Nick, and indeed conversations have been going on with British Chambers of Commerce. So it's an area that is still under review and has been no means absolutely made mandatory, because it depends largely upon who is making declarations, be it the agents or the traders themselves. And for that matter, the volume of trade, because you wouldn't use a system like this if you were only, let's say, importing one item per month. It wouldn't be worth it. But if, let's say, you were importing maybe 3 or 4, even let's say 2 or 3 a week, maybe more than that, then of course, that facility is much more justifiable and should be looked at very seriously. But again, this is up to the trader. It is not a decision we can make for you. HMRC have stated that this is part of the procedures, but what they do require is the overall simplified procedures being put into place because of the use of the spreadsheet records, i.e. EIDR. Alongside this, the need for duty deferment accounts. Now, apparently the HMRC people have said, we're prepared to be rather more lenient and effectively allow the agents the use of their deferment accounts. There are issues. I'm not going to go into them now. If you do want to know more, as Nick said, we can do calculations on what the implications are for either your own duty deferment account or the use of your agents. So this is an area which is something for discretionary discussion. And as I said, we are very, very prepared to look with you at what the options are. One thing then that is this major element is the transaction spreadsheet records. Now, this is something HMRC have been working on for some time, even before the Union Customs Code, and have actually said that they require all traders to have copious import and export spreadsheet records on Excel. EIDR is actually part of this. It mainly works for imports, but an equivalent sheet is available for exports as well that works more or less on the same principle. This is a requirement that HMRC have stated, and they will require every trader for imports and exports to maintain these sheets on a monthly basis to show precisely all the import and export transactions that are being carried out. Alongside this, there is something a little more generic called the Import Duty Management System. Now, this is basically a good housekeeping system saying the trader has to be in charge of the way that they deal with import duty and VAT. Now, VAT will, as far as imports concerned, be dealt with by the postponed VAT accounting system. But duty, because of this inference of the 6 months grace, will have to be managed very carefully indeed, because even though you might not be paying it at the time, you will be expected to pay it at some stage. And if you are conglomerating several imports over the month, at even 6 months, you may find that that duty level accumulates very, very considerably. And you have to bear in mind your cash flow, which is why Nick has said that we are prepared to look at these systems with you and determine the best way of managing it, because there is no simple answer. Duty and VAT management is crucial, more than ever. Any company that imports from overseas will know that. And therefore it is vital, because the sheer frequency and continuity of imports coming in from the EU, that you will be expected to have a duty management system on board and to control it at all times. Let's face it, the duty you have to include in your costs, the VAT of course you reclaim, but you still have to manage it because it is a legal issue as well as being a fiscal issue. So I must emphasize this. And then postponed VAT accounting, which I have already gone through. So therefore, although there is the carrot in the form of the postponed VAT accounting, the stick lies in the whole issue of your import duty management system, which you will have to have on board. Now, Irish traffic, this has come up more recently because, of course, this thorny issue of the border between the 6 counties of Ulster and the Irish Republic. And of course, there is a huge amount of traffic crossing it, not just in terms of freight, but in traffic and, for that matter, rail, because of course, there are the famous enterprise trains that run between Dublin and Belfast. So there is a huge amount of traffic crossing the border every day of the week, including weekends. And of course, this refers to all kinds of products. It could be dairy, it could be animal, and of course, alcohol. The whiskey business is massive in the Republic and in Northern Ireland, and in itself is going to create issues in terms of excise management because of the nature of what moves within Ireland itself. Now, on this basis, it was already established that there would have to be a set of controls between the UK and Northern Ireland in order to avoid a physical border presence by immigration and customs. So therefore, we are going to have a series of controls, more to do with checks on the routes, but also in terms of declarations to show, number one, where the goods have come from, and number two, where they're going. One thing that most of you may not be aware of is that a lot of traffic that goes through the UK is actually passing through it. It's coming from the continent and going across to Ireland, whether it goes via the North Channel into Ulster, or whether it goes into the Republic from ports such as Liverpool or Holyhead across to Dublin, and even Rosslare Fishguard service. Now, this may well have come from the continent, and it will therefore be under European transit control, the community transit system. And we're going to have to take charge of that. Certainly agents are, because the fact those goods will not be entering UK domestic free circulation territory. So this again is an area which is creating problems for many traders, because perhaps even of grouped consolidated trailers that may pick up goods along the way. Whether that is going to be allowable, we don't know, because those trailers may have to be sealed. But either way, there will have to be controls for traffic between the mainland and Ireland, both sides of it. So customs declarations, use of GVMS, and of course, advanced cargo pre-clearance, which means that the 2 hours advance rule concerning pre-clearance of cargoes will most definitely apply. Whether that will actually clog up ports such as 12 Quays, Birkenhead, Liverpool, Holyhead, and the list goes on is another matter. But the proof of the pudding, no doubt, will come out sooner or later. There will also be the need for the electronic accompanying document verifying the shipment details because of transit rules, as indeed it will for traffic leaving the UK and heading across the continent to countries such as Austria, Hungary, Poland, and the list goes on. So there will be a need for goods movement reference numbers, and therefore this will be a system which will have to be adopted by agents particularly, but also traders in terms of the verification of cargo movements. CFSP I've touched on. It's an electronic system. It has in fact been in operation for many years already because it is used predominantly with customs warehouses. The principle being that at the frontier, there is a simplified frontier declaration. That brings the goods in and clears them through the port, along with what is known as a C-130 out of charge note. That gets the goods out of the port and up to the trader's premises. Now, in a customs warehouse, you book the goods in, they're in customs duty suspension, and then when you come to release them from the warehouse, you make a final supplementary declaration, which clears the goods into free circulation. CFSP can actually then be used for traders in normal circumstances, given the 6 months rule, because it then says that you can bring the goods in electronically, simplified declaration, into your premises, book them in under a supplementary declaration, and they're there. When you're going to release them, you then have a final supplementary declaration raised through your agent probably, although you keep the records of it, and then the goods are in free circulation. So CFSP, in fact, is a very, very flexible system. But because it is an electronic system approved by HMRC, you do need to have approval for it. And in reality, this is part of the overall application for simplified procedures. The only thing I will issue a caveat on is that electronic systems do not fall off trees, and nor are they free of charge. They can be quite expensive, so you have to justify their use. So before you jump anywhere near this, firstly, have a look. How much are you importing or likely to import from Europe? Is it going to be in container or in trailer loads? Are you likely to be using it at once? And then tell us about it, because we will then advise you, as we already are doing with several companies, some of which are represented here today, on the use of customs warehousing or certainly trade facilitation for clearance purposes. So please bear this in mind. Don't panic over it. Don't think, oh, we have to do this tomorrow. No, but do consider what the implications would be if you were to go down this route, because it is a cash flow exercise. It can save a lot of money, but it does require a considerable outlay. So bear in mind that, again, there are pros and cons to it. But do bear it in mind on the grounds that simplified procedures, once implemented, are here to stay, and they will most certainly apply to all traffic with Europe. So in reality, these systems already exist, but they're being extended now for onward use for traders who are doing a large amount of business with Europe. If you're a trader only doing with the odd import every month, forget it. You won't need any of this. It will be a simple system whereby a declaration can be produced at the time. But if you're doing a lot of trade with Europe, bear in mind that you want a simplified system in place, because in reality, you will need it. Import VAT postponement I have touched on. It's the simplification of the import VAT system. At the moment, if you have your agent clearing the goods, it is more than likely that they send you a freight invoice complete with the duty and the VAT, which you have to pay before you actually receive the goods. HMRC are looking at this possibility now of encouraging traders to have deferment accounts themselves, because this will simplify the process. I know there is the question of applying for deferment accounts, and it doesn't take 5 minutes. You can be sure of that. But once you have a deferment account in place, it facilitates the whole issue of how you are declaring goods and how you're actually paying the duty and the VAT, because in reality, it's done by direct debit. Now, again, I don't want to go into the details of it. That is for another session, and we can quite easily arrange seminars for this basis. But suffice to say, the principle of import VAT postponement means you don't pay the VAT at the time of import. You postpone it until you do the VAT return. And the process then is very similar to your present intrastat intra-European reporting, because it's reverse charge. You charge yourself the VAT on the purchases side, and then you reclaim it on the basis of claiming it as an input tax. So in reality, the two figures balance out and effectively become zero. So that means you're not physically paying the import VAT, you are accounting for it. And in terms of cash flow, this will be an enormous benefit for companies that want to use it, because it means, therefore, that they won't be paying the duty and the VAT to the agent. They can use the electronic systems using their own deferment account in order to manage it, which is why it is all part of the duty management system. So this is going to become operational on January the 1st. Whether you will need to physically apply for it, we're not yet sure. It may well be that HMRC will will send out letters or bulletins asking you if you want to be part of it. Well, the answer obviously is yes. So therefore, you will get the chance to notify them that you do want to be included in this system. So in that respect, import VAT postponement will be a major cash flow benefit, and will, I believe, make even arguments that have said, oh, we're going to have to pay all this money out because we're not going to have a deal or whatever else. That will, in fact, simply disintegrate, because given also that many tariffs are going to become duty-free, you may find that a free trade agreement, as far as we're concerned, may be completely immaterial or superfluous, because in reality, your liabilities could, I'm not saying there will be, but they could amount to virtually zero in terms of physical duty and VAT payment. So please bear that in mind. The government hasn't said everything. It's when you read between the lines that you discover what the benefits actually are. Do a little bit of homework, and you will be surprised at the advantages you can actually have if you are prepared to use the system to your advantage. And again, we as a chamber are here to take you through this process. Even if you spend money with the chamber, it could be a self-financing exercise, and in reality could save you a huge amount of money on a long-term basis. So please bear it in mind, go away, consider it, and then talk to us, because the rest of the year is still available to get these facilities in place. With Origin, there are already free trade agreements lined up, and you can see the list there. It is, in fact, a huge amount of trade. The UK has already concluded a large number of continuity agreements. So anything you read in the press about, oh, the nasty after effects or adverse effects of no deal with the European Union, and even as I saw yesterday, that the possibility of with a free trade agreement with the US is still a long way off. That does not put us at a disadvantage. because the UK global tariff on the one hand is reducing duties already, which is in itself a distinct advantage. And by the way, if you haven't yet got your copy of the UK global tariff, the Chamber has, and we are perfectly willing to send it to you if you ask us. It's the old story, ask and you will receive. Now then, Origin therefore tells us that there will be conditions, obviously as there are now, in terms of trading on a free trade basis with many of the countries. Those conditions will remain exactly the same as they are now. They won't change. And in reality, the main free trade agreements we already have are a continuity of what we're enjoying at the moment. And you can be sure that the Chamber is actively promoting trade with these countries. Nick has already done work with, I think, Malaysia and various other countries in terms of the promotion of trade, much of which is already subject to free trade agreements. So you can be sure that as exporters, you already have distinct advantages on this score. Now, it means also that we have had to engage in our own particular preference rules of origin, most of which remains the same, but we are now an autonomous sovereign nation. In the eyes of international relations, we have our own people, our own territory, our own government, and now I am pleased to say we have our own national sovereignty. That means, as the government has already stated, we are free to trade our own free trade agreements and negotiate them at will without the interference of any other country in our affairs. So this can only be an advantage to us. However, against that, there are increased HMRC controls and approvals. Approved exporter that Nick has already spoken much about in the past, as well as registered exporter REX. And I have to say that HMRC are working more and more towards electronic approvals. EUR1s will of course go, but what there is the approved exporter status, some of which you already have perhaps. Some of you I know have already engaged in this, but it's for others to come on board because it means that HMRC will approve you to have effectively an authorization number for the number of countries you trade with. And again, Sheffield Chamber is a specialist in this area. We've taken several companies through the process and we're willing to help you all as well. Boundaries do not exist. This is what we're here for. Trader self-assessment, of course, is vital. There are self-assessment questionnaires, and again, we have copies of those, and we will duly send them out, and again, assist you to fill them in because there are a lot of preconditions that are required before you can become approved. There is also a system called diagonal accumulation, which says that, for example, if material comes from Turkey to Morocco, and there is a free trade agreement between them, manufactured in Morocco into clothing, and then it comes across to the UK. As long as we also had a free trade agreement with both Morocco and Turkey, then those goods would come into UK on a free trade basis and therefore zero rated preferential duty. And this is where the diagonal accumulation comes in because of this interrelationship, in this case, between the three countries of the UK, Turkey and Morocco, all of which have free trade agreements between them. So this again has been stated by the government and will be part of the preferential free trade system. And again, if you want advice, please do contact us. With VAT and excise, I have already touched on it. VAT is a very important area because of the import nature of it and therefore the new rules to apply. But suffice to say, international VAT is a huge area. Domestic is one thing, and of course that is chargeable. But the one thing that now does apply for all exports is that you must have reference to the export declaration. Even if you don't get a copy of it, you must have the details of the reference number of the entry so that you can put it on your paperwork. I will, however, say, as I would normally do with my customs hat on, that it would be much better if you do have copies of export declarations, especially over the value of £2,000, because that is the threshold for the issuing of export declarations. Below it, you don't need them, but you do have to have the customs reference to the export that's usually provided by the agent with reference to any declarations they do on your behalf. So bear that in mind, please. We won't have Intrastat unless that is you have a VAT number on the continent, which means you would use that for any trading you're carrying out within the European Union, which would be VAT zero rated between member states. But as far as the UK is concerned, it is not expected that you use ex works because you will have no evidence of export at all, and that will simply not be acceptable under any circumstances. Therefore, you would have to use an Incoterm such as FCA, which would give you then the reliability of the export declaration and indeed the compliance of it. So please bear that in mind. The rules concerning international trade will apply totally, and therefore there will be a need to review your export policy. EMCS, Excise Movement and Control System, will continue to apply for the movement of excise duty suspended goods within the UK. But coming in, an import declaration would be required, and that would mean that if you were an excise company, you would have to also apply for ownership of excise goods within the UK, whether in an excise warehouse or not, and also as a registered consignee. Now, this again is a specialist area, and I don't want to say much because this is again an area which can be covered by a separate seminar if we wish to go down that route. Import VAT postponement, I stated earlier. EU VAT, I've mentioned the need perhaps to obtain a VAT number in either the Irish Republic or in the rest of the EU. Now, for DDP, you would be required to do this, but you would also need probably a tax registration number and a fiscal representative. Again, my friends in Belgium will be able to verify this, which is why we've included them in this webinar, because it may well be that they want to take more part later on in advising you. And officially, we are working with them now. And that would mean that we can have direct links with the continent that we will probably need on a long-term basis. So my thanks to Dimitri and Jeff, of course, for attending today, because they do have that facility, given that they are freight forwarders and shipping agents in Belgium. And I'm quite sure would be delighted to help people if you need advice for the continent. This is something we're working on. Now, of course, I've mentioned the issue of Incoterms, and this is something you must look at, because you have to determine whether you need a VAT number on the continent or not. And you very definitely do need to review your Incoterms because of the inferences of customs declarations and whether you will need to be represented on the continent or not. I don't know if every European company is prepared for Brexit. I suspect they're not. So therefore, there may be the issue of finding out to what extent they already have import customs facilities on the continent. But this, of course, is why we are working with the EU, because it has to be a streamlined, seamless approach to making sure there is no friction at the borders and that we can avoid the issue of trailers piling up on the motorways heading to the Channel and North Sea ports, because that is a scenario that none of us want. It will delay goods in a huge way. And then, of course, the issue of the EU import VAT reclaim, because you'd have to be VAT registered on the continent in order to be able to do that. So again, you need to review your trading relationships with your customers, and indeed, if you're importers, your trading relationships with your suppliers, in order to determine what is the most seamless route we can have, what is the most streamlined and efficient route we can have, and therefore to make sure that it works so we are not going to be swamped with bureaucracy. Now, I mentioned the UK global tariff. Everybody will need a copy of it. It is a spreadsheet. It is not the trade dash tariff that we've used so far. That may be eventually rehashed, and we may find that there will be a website version of it. But for the moment, as the interim, the spreadsheet is available, and if you are interested, we will send it out to you. It's a big spreadsheet, and you will only need the specific commodity codes that you use. But you may get a pleasant surprise in that although many will stay the same, others will be slightly reduced, as I've already seen, and others will be very drastically reduced to the point of zero. So in many cases, you will find that trading as an import will be made a lot simpler for you, and that you do not have, in fact, an additional liability, or even if you do, it may be very, very minimal, which means that your cost structure is not going to be compromised concerning your trade with your customers. So in that respect, the UK global tariff is giving huge advantages to the British economy. at a time, of course, when we most need it. Other requirements, EORI. Well, I think most companies by now should have an EORI. If they haven't, then it's time to get one. Doesn't take long. Transaction spreadsheets, I've already said, are an absolute necessity in the form of EIDR. MSS is the system that the HMRC people use, and you can contract to it. Again, for further details, we will send that out as to how you can engage in an MSS contract. But I must say, it is a very good tool, and it in fact does lead to a very major element of compliance because it applies to both import and export transactions based on the use of customs declarations. It is now used for non-EU traffic, but it will become a part of EU traffic. Documented import-export procedures, SOPs, are again an absolute prerequisite. HMRC insist on them, because this is part not so much of the Union Customs Code, it is a global requirement based on the revised Kyoto Convention and what we call the SAFE framework of standards, security and accountability in the freight environment. It's all part, in fact, of the ISO system for global trade. Nick has already made the point to many of you about the need for this, and HMRC are categorically stating that you must now have documented import and export procedures manuals, and this of course is an area that we deal with as we do with the audits, because again, as Nick might not have mentioned, it is now a prerequisite from HMRC that if you are applying for customs procedures of any sort, you need to have both internal and external management checks and audits. So please bear it in mind, it is something that the chambers are being told to do, and therefore it is part of any customs approval process. So please do bear it in mind that this is part of the overall requirement now for importers and exporters. And then, of course, regular import and export management checks, meaning that it's ongoing. It's a bit like continuous improvement. The idea of the definition of the issue, its measurement, the analysis, implementation of procedures, and then controls. It's actually what we call DMAIC. And if any of you have actually got some paper in front of you, I'd ask you now to write it down. Take your blank piece of paper and write vertically the letters D, M, A, I, and C. The first, as I said, is the definition of the issue. So this is the first part of the management check. The second is the measurement of your data, imports and exports, duty and VAT, procedures. You then analyze it. You look at it and you review it and you determine, what are we spending? Do our procedures work, or is there a need for a review? From that, we then implement our procedures, which is based on the SOPs. So we now put them in place. And then we progressively control them on a periodical basis. It's either through self-assessment or it is through external audit. And as anybody knows anything about the US system, and in particular Sarbanes-Oxley, which came out in the wake of the Enron collapse, you'll realize that transparency is a major prerequisite in any accounting facility. And the long tentacles of that legislation now have extended around the world. So you see, this purpose is a check system that is hopefully there to start working in your own mind to say, right, what do we need to do to maintain control? Because if you can control your operations, you won't have half the problems that you would even imagine. And if you can start this year, and fairly quickly, you'll find that by the new year, you are already set up. It may cost a bit of money to get it put in, but it's peace of mind. And as far as I'm concerned, it's peace of mind that you need. It's a state of well-being. Can you be confident about what lies ahead and control it? So the requirements are duty and VAT management, possibly approved exporter status, certainly HMRC approvals for what I've mentioned, as well as possibly customs warehousing and IPR. And I do know there are people on board. In fact, I have the vision of Mr. Hague sitting here in front of me, who is already involved in this. And Graham, yes, it will get done. I know you've got the issues. Hang in there, boy, we'll get there. Relaxed rules on financial guarantees. That is the other thing that HMRC have already stated. They are going to get rid of much of the guarantees because import VAT will be postponed. It won't be payable. And since VAT is, of course, at 20% on most things, you therefore will find you're not paying it out per se, except on a domestic basis, which can only be of benefit to your bottom line. So again, consider this as an overall bonus to what you're doing. In fact, it'll be almost an essential bonus if you think about it. But overall, increased trader awareness and compliance is what comes out of this in general. Are you prepared? Or do you need to do some work? Well, now's the time to do it. But it'll give you that well-being and that confident state of mind for the new year. And that I can promise you. As well as, of course, training customs procedures. But I don't need to say that because Nick already has much in the way of initiatives on board at the moment that I'm quite sure he can talk to you about. And I know that that training is comprehensive enough because I have input into it to take you forward. EU actions, full customs border checks as from 1st Jan, they are going to carry out the checks regardless of whatever we're doing. EU pre-clearance, I've already stated. The need for EORI and VAT numbers on the continent if you're using DDP. I'm not saying don't use it, but be very, very careful. You must be prepared for this if you are to go down that route. And then, of course, stringent documentation requirements, which is, as a matter of course, a necessity because paperwork is, of course, everything, whether it's electronic or hard copies, coffee stained or otherwise. The Union Customs Code, it's there. I'm not going to go into it. We will still be using much of it, not entirely, because we are obviously going to exit some of it. Hence the idea that HMRC will be more flexible with various arrangements. But I do hasten to add that it is not based on a European initiative at all. It is part of the World Trade Organization's Trade Facilitation Agreement, which in fact applies globally. And again, if any of you are interested, we can send copies of that out because again, I have it on computer, so I can issue you with the whole agreement if you so wish. AEO status will increase, but HMRC have stated they're going to relax some of the contingencies of it and some of the stipulations because they're going to make it available to far more traders, possibly in the form of what we call trusted trader. Again, that has not been put in tablets of stone. We still wait for the absolute confirmation of that. Financial guarantees are, in most cases, going to be either reduced or removed. So in some ways, even the need for AEO might be somewhat obviated because the financial guarantees themselves are going to be relaxed. But what is certainly a requirement is trader self-assessment, of which I've already mentioned, and trader compliance, which is a foregone conclusion because if you're going to use the system properly, you have to be compliant with it, which is why, of course, the Chamber does its compliance audits. And every one of them, I can hasten to add, and Nick will back me up on this, have been a complete success. No trader that we have audited has complained. Every one of them has said that they gain benefits out of it in some ways. It may not be immediate, it may be long term, but all of them have stated that it has been in itself a peace of mind exercise. So is it purely UK? No, it's not, it's global. We're part of a global trading community, let's accept it. But if we know what we're doing, we can make the most of it. If we are prepared in advance, if we use a bit of common sense, logic, and we don't panic, we will get there. As they say, fear overload means you don't think in a rational fashion. It's called panic. Let's not go down that route. Let's say we are confident we can do this. We can work with this together. We can all get the benefits out of this. And this is ultimately what I look for. As most of you know, I believe in positive thinking. If any of you can find one negative reason, I'll find 10 reasons positive for you because I want this to work and I am committed to helping you making it work. That's what I want because at the end of the day, I want all of you to do well out of this. I'm part of this. We're all in this together. I may have been driving it in terms of the advice, my knowledge, etc. But I want to make sure it does work so that by the next year, we're confident in what we're doing and we all are going to win. It'll be win-win for all of us. Yes, there are conditions, risk management and compliance, but with a little bit of help and certainly with management, we will get there. Where is the Chamber? It's here. It never went away. Lockdown may have made things a little more inconvenient, but we haven't stopped working. We're all in different places. but we're still linking up as we are today by Zoom, by email, whatever source. Please do use our services. That is what we're here for, because we are doing it, because perhaps other authorities can no longer do it in the same way. And I'm not going to criticize anybody on this. Everybody has shortcomings. But the chamber here is equipped to help you in every way possible. Please do not hesitate to talk to us. As the last line in bold says, we are here to help you. Ladies and gentlemen, thank you very much. Dank u wel. Merci beaucoup. Danke schön. Muchas gracias. Muito obrigado. And which other language I would care to use. Spasibo vam, for the benefit of Julia and one or two more. But indeed, thank you very much. And hopefully we will talk to you again soon. Nick, it's over to you. Questions, answers, can we help?
Right, okay, Mark, if you could just remove your screen share, that would be helpful. So I hope you found that interesting. If you look at the chat, I have been answering many questions during the course of Mark's presentation, and we are running towards the end of the, well, we've gone over the hour now, actually, so I don't want to extend it very much longer. However, Mark and I are very happy just to stay on afterwards if people do have questions. I think we'll play it like that. We'll stay on for 10 minutes or so after this, just to answer questions. I would just like to make a quick shout out. I know Steve Townsley is on. Steve has been a trainer for us for many years, 27 years, I think, for Sheffield Chamber of Commerce. And even though he's in Germany, during lockdown, he has set up some really good online training courses, which we're getting sorted now at Sheffield Chamber. So, hi, Steve. Good to see you. And I'd also like to shout out Julia, who's on the compliance team with the International Trade Centre. And there she is. She's just put herself on the screen.
Hello.
So, all right, Mark. So,
I think, can I just put in, I think, Katrina, did you have a question for us? Oh, she's on mute. Oh, yeah.
Okay. I did have a question. I just wondered whether you were going to hold a webinar for the EMCS.
Yes, we are. I've been working with the BWA, but yes, that is the idea. It is an excise area of note. The BWA already knows what I do with that. So yes, there will be an EMCS seminar for any of you interested, which we can run the same way, and I will take you through the whole issue of it and how it's going to work.
That would be absolutely brilliant.
We will keep you informed about that. So watch the Sheffield Chamber of Commerce website, /International. I'd just like to say that Sheffield Chamber are being really active in trying to get this information out to people. We hired 2 new people, Akua Kai and Joe Colville, at the beginning of the year, and they're spending all their time just contacting companies. We don't mind if they're members of the chamber or not, but just to make sure that they are happy with the with their setup for the change that will come at the end of the year. And if they're not, we will help them. And you know, we do a free of charge service for anybody who wants to have a discussion, primarily with me. I include Mark as well, but of course, when we're doing the audits, they're much more specific, they're much more bespoke, and there is a fee for that. But you know, it is really helpful. So I think that's an important point to put over. Finally, we have spoken about declarations. In July last year, Sheffield Chamber was accredited by HMRC as an authorised customs broker, and therefore we will be able to conduct import and export declarations on your behalf. We are currently onboarding companies to be prepared and ready for the new year. We have to do that because we do have deferment facilities, and we will allow companies who are having their declarations done by us to use our deferment facilities for a short amount of time. But and because of that, we obviously have to go through a certain degree of due diligence before we can do that. So if you're interested in looking at our onboarding conditions, please email me. Furthermore, Sheffield Chamber was accredited with authorised economic operator status in August last year. We had been advised by HMRC that we're the only chamber in the world to have AO status. And this week I have already put in our application for CFSP, which is Customs Freight Simplified Procedures. Anyway, that completes our webinar for today. We will share Mark's slides with all delegates, and if the recording is suitable, we will put it on our website. So if you just Google Sheffield Chamber of Commerce and go to the International tab, hopefully it will be there. Any questions, please email myself and Mark at customs@scci.org.uk, and we will get back to every single request. I've also copied the chat box, and any questions that we did not get to, we will answer individually. So that's about it for now. We will be holding another webinar like this very, very soon. And within the next 2 weeks, I'm hoping to have a combined webinar with the British Chambers of Commerce, particularly with Liam Smith, who is the Director of International Trade with the BCC, to talk about onboarding and declarations specifically, because this is such an important part of it. That's it. I would really appreciate your feedback on this particular webinar. You can send the feedback to Customs and it doesn't matter whether it's good feedback or bad feedback. The next one we do, we want to do it better, and we can only do that with your response. So that's it. We've run over by 10 minutes, but thank you very much to Mark. Mark is a great person for Sheffield Chamber of Commerce, and as I said at the beginning, we have a really good working relationship. Thank you to everybody who came onto this webinar. Please leave us your feedback, and I wish you all the best for the rest of the day, the rest of the year, and of course for the turn of the new year when we start on our independent journey. So with that, thank you very much, and we'll say goodbye.
We will indeed.
So